everyone. Now, last night I posed a opportunity on Spotify, right? And we like to own this company, but I mean the price is hundred plus dollars. So instead of owning the company, we say that okay, let's create some income and by selling a credit spread. Then I know that credit spread is kind of advanced for some new traders. But actually, all you need to do is just follow my trade, but the Excel spreadsheet, all the information details are there. And the problem is you need to familiarize with the trading platform, whether you're using Thinkorswim or whether you're using trade stations or any other broker. You can see that this is Spotify is the ticker symbol is SPOT. Now we are going to put in the trade was posted is last night, 11 March, and we're going to put in a spread, credit spread. For credit spread, we buy and sell at the same time, right? It's just that the time expiration is the same, and the only difference is the strike price is different. So for here, the information is all you need is all here. That's all. That's all you need, right? Expiration 24th of April. The strike price we sell at 120 put, and at the same time we buy a 110 put. And for the selling of 120 put, we receive between these two, we receive a difference of $2.30. That is the credit they're going to credit into our account immediately the moment our order fill. So one contract equivalents to 100 shares. So $2.30 multiplied 100 shares. So if you sell one contract, you are actually receiving 230 US dollar immediately. Now, if you have a bigger appetite, you have bigger account, you sell 2 contracts, 3 contracts, 10 contracts. It depends on how much capital you have, yeah. So if you don't have the kind of appetite, please do not try to sell too many. Otherwise, you can. Now, one contract, 100 shares. So if you sell one contract, you make $230 US immediately. Now, if you say, oh yeah, I want to make more, say okay, put it 5 contracts. So 5 contracts, you just multiply 230 multiply 500 shares. That is the income that you created last night, $1,000 over dollar. Then for credit spread, the maximum profit. The maximum profit is the premium that $2.30, which multiply 100 share minimum, which is 230. And the maximum loss is 770, which is the width, right? The width between the two strikes less of the 230, that is 770. So that is our maximum risk or maximum loss in the event that this trade doesn't work out. That is the maximum loss. So the good thing about doing a spread is avoid running into the risk of have to buy the share, right? And I know that a lot of people say, I told them that okay, you don't sell naked put unless you are willing to buy the share. But there are many traders, I understand that they not only they sell naked put and they don't intend to buy the share, they actually overtrade, right? So when we see the S&P Dow Jones drop by 20 points, you know, because of coronavirus, not because of economy. And what happened? All stock across board, right? Well, irregardless what stock is, unless it's a healthcare, right? And then you can see that all stock drop. And that kind of situation, people start to get panic, and then they start, because they know that they are not supposed to sell so many contracts, but yet there's so many contracts because they want to collect more income. And what happened is they end up buy to close, right? Buy to close the position before the stock get assigned to them. And then when you buy to close, of course, you have to pay a premium. So the loss will be when the premium received and the premium that you pay, that will be your loss, right? So this is the reason why people fail when selling option, because they sell something that they are not supposed to sell, right? Or they sell too many contracts, right? So please be patient when you want to make, be patient when you sell a naked put. Know yourself, right? Know your capacity. Don't try to make money very fast and yet you end up into trouble. So having said that, let's move on to I'll show you, demonstrate to you how to put in a vertical spread. Expiration is 24 April. We're going to sell 120 put and buy 110, right? So we go to our Thinkorswim. We go to the trade tabs here, trade tabs. Then we look for the 17 April expiration, right? This is the strike. Go to the 120. You see this 120. We just click and sell. Now remember, you are selling a spread, so you should click vertical. Whether you are trading with Thinkorswim or whether you are trading with trade stations or any other option broker, as long as you are trading a spread, you just go to vertical. right? That's it, simple. When you do a spread, means you are in and buy and sell an order at the same time. You just go to vertical, regardless whatever option platform you are using. So now we click vertical. Immediately you can see what happened. There are two orders pop up, right? One is to sell, one is to buy. Now, so we say that sell one contract, one minus one means sell, plus one, you can see here. When you see a plus one means you are buying. Check your expiration date, make sure it's the same. Now we are selling 120. Now not call, yeah, we're going to change to put. We are selling put, right? And we are buying 110. So we just change this to 110. Put. Credit received, $8.35. So over here, we always use a limit order. You can have market order, etc., but we always use limit order to get in, because if you use a market order, it means that you might not receive the premium that you wanted, right? So we always use a premium limit order to get in. Now, this order here, day means that if you put a day there, it means that the order will automatically cancel. If during the market open, your order never get triggered, you will automatically cancel. Then next day, you can redo it again. So usually I would suggest just put to GTC. GTC means good to cancel. And for the exchange, their main exchange here, but just leave it to the best, because they will reroute. They'll go around with different exchange, and then they'll give us the best fit, right? So after all, you finish all this, right? One more last thing you need to check is credit, right? See this? We are selling a credit spread. Make sure there is a word credit, because when you are doing, as example, let's say you do a debit, you realize that it's different. Debit means you paying, right? So we are not paying, we want credit, right? So it's 10. So everything's okay, right? Now you can see there's a natural price, there's a mid price. You can actually slide this around, this pricing around. Sometimes you say, oh, value, the price already run away from me, so what is the price should I get in, right? Then you should look at here, right? Usually if you are receiving an income, you want to slide your bar all the way to your right to receive the maximum income. When you are buying something, you want to slide the bar all the way to the left, and you pay as little as possible, right? So this logical, it makes sense. So now we are selling a credit spread. I want to receive as much as possible. I spread the bar all the way to the right. Finish. I click confirm and send. Now once confirm and send, you also realize that your order not yet executed, right? They just confirm. It's a confirmation dialog, right? You say that, okay, well, so they are asking you to check right now. Make sure this is correct, right? So you can see that our break-even price is 111.65, and the maximum profit is 835. The maximum loss is 165. Okay, one contract, 120 credit. Okay. So if everything okay, what we do is just you click confirm. We just send. Okay, send. Now after you send, you go to your monitor tab, activities and positions, and under working order, you can see you should have one working order there, a vertical spread order. Vertical, buy, sell at the same time. Right, check through. Anyway, yeah, credit. Now it's working, it means that your order is not filled. Now once this order filled, you will disappear from the working order here and go into the fill order. Fill order, and at the same time, you will appear right down at below all your order. So now, that's it. That's all you need to do, right? Now, if your order has already filled and you want to find out, hey, how much money I make on this trade, you go to account statement. You see here, account statement. Under account statement, make sure that your account click is a margin account, and 30 days back from today, right? You can change this. By default, they give you 1 day. 1 day. If you put it 1 day, it means that you can only see 1 day ago history, right? So usually I put it depends how many days you want. You can put 7 days, you can put 30 days, up to you. Let's say put 7 days. So it will show you for the past 7 days all the transactions. Now once you click here, 7 days, right? And then you go to cash and sweep vehicle. Cash and sweep vehicle. You click here, and you will see the order you put in, and you'll see how much money you have just created for yourself, and you also will able to see how much your account actually go up by the 230. Example, if you sell one contract, by so that's how the profit that you just created. So I hope that this short video that to show you how to put in a vertical